Good morning, everybody.
Good morning.
Now
Good
I
morning.
working. Hi, how are you, David? Hi, Ashlyn. Good morning. Good morning. Good morning. I heard an echo, so I just wanted to make sure that. Do you guys hear me as an echo?
No, you're
No.
fine.
Oh, perfect. So we are going to be starting this chat, and how's your day going? How's your morning going? What have you done already this morning? You know, one thing they say about people in business, the business mind never stops, and these numbers are growing. So I'm giving people a minute to jump in. So talk to me. What did you do this morning, Ashlyn?
Yes, I was up this morning. I did a quick workout, 30-minute workout this morning, just to refresh my body, refresh my mind, release some energy, celebrate the new year. Got myself together, and now here I am talking to you, ready to have some good conversation. So I did a workout this morning.
Nice. David, what did you do? To jump in. So talk to me. What did you do? Sorry. All right, now we're good.
Okay. I did a little workout this morning myself. I rode 10 miles on my stationary bike. That's a morning ritual for me to kind of get me going.
10 miles? I slept 10 miles. That's what I did this morning. I ain't working nothing out, y'all. I'm trying to. I got to get better, y'all. Help a sister out. 10 miles. I worked my face this morning. That's it. Trying to hurry up. Myself. I need to, because I walk up and down these stairs in my house and I'm like, don't let me. Y'all. Well, you know, they say the best thing to do is just, you know, tell the truth, shame the devil. And I'm telling the truth. I know I need to do better.
We all can have some places that we can do better. So it's okay. One day at a time.
Absolutely. What about you guys out there? Tell me. I got a few people out there joining us. It's good to see everybody. Hey, I got Kelly. Hi, Kelly. Good to see you, my dear. I got Rhonda's joining us. Silas, I hope you guys have plenty of questions because I want you to be able to type in questions. That is the purpose for today. There is really, you know, we don't get paid to do this. We have a passion to do this. We want people to be well equipped with the information so that you can make a real informed decision about your goals and ideas in the year. So today, you know, with no further ado, we're going to get started because I am very cognizant of time. I'll start with introductions. I have with me Ashlyn Price, and she can tell a little bit about who she is and how she got into the business and what it is that she brings to the table. And then right behind that, I want David to kind of give an introduction to who he is and what he does with lending and how he got into the business and kind of what brings them to this table. And then I'll share a little bit about me for those that don't know, but if you're here, you probably do know me, but it's okay. I'll tell you anyway, because you might have had somebody to join in. So with that being said, I'm going to say, Ash, I'm going to turn it over. Ashlyn, just give us a little bit about who you are, what you do, and what brought you into the business.
Yeah. So first of all, I'm going to give it back to you, Miss Tanya. I appreciate all your leadership, all your guidance, everything that you do. So thank you for that. And then thank you again for having this platform, creating this platform to get people's questions answered and just to have a conversation and educate people about the process. So I give all kudos to you. So thank you for that. But I am Ashlyn Price. I am a financial literacy consultant. So I educate people on their finances, offer them resources and services from the very beginning of building their credit, all the way working it through to managing, budgeting, savings, all the way to the very end of having a will, a trust, and a power of attorney. So I kind of do an array of things of teaching and educating and offering services and resources to people. I got into the business, self-disclosure, because my finances was jacked up. You hear me? I bought a car a couple years ago. I was paying 24.9% interest rate on a car. Right. But the car didn't have all the bells and whistles. It wasn't brand spanking new, but I had to purchase a car, get to work to make the money to pay for the car. So it was like a revolving door. And I was like, there has to be a better way. I felt like I was like a slave to my finances and my money because I wasn't happy. I wasn't excited about spending my money. It felt like another bill. I wasn't excited about purchasing my new car because I was paying 4, 5, 6 times what the car was worth. I said, oh no, there has to be a better way. So I sat myself down. I invested in myself. I surrounded myself with good people, good leadership, people who knew about finances, who knew about money, so I could teach myself. And then in return, I said, I have to teach this to other people. There has to be another way, giving people hope and encouragement. Fast forward now, I feel so much better about the money that I make, about being able to make purchases. You know, it's exciting to me now. So that was just my testimony as to why I even got into the business, because my own finances was jacked up. You know what I mean? Jacked all the way. So I sat myself down, surrounded myself with good people who knew about business, who knew about money, who knew about credit, finances, all that other good stuff. From learning that information, I had to teach to someone else. I had to give hope. So it's really not about myself, really about educating and giving other people hope and encouragement moving forward to get their buying power back.
Absolutely. I think that is so key. One of the pieces you said is surround yourself around others who know. Usually out of our pain comes our process, right?
Mm-hmm.
Yeah. Through it makes us better, but then it helps us to know what steps to take, what to do, what not to do. So thank you for sharing that. Thank you for your transparency. I think that's important for this platform, because a lot of times people will say, oh, you can do this and you can do that, but they don't tell you the how. They don't tell you the details, and they don't tell you where you've been. Look, I'm 50 and Cayute. I know it, but let me tell you, I got enough tests and trials and tribulations to attest for why I am where I am today. And I still got a whole lot further to go, but I'm not somebody who is scared to tell my testimony and to be transparent, to give it to somebody else. Because if I can save you a couple of steps, I've done my job. I know what that's like, to having been there, and then you have to trying to scratch your way up. So thank you so much, Ashlyn. We'll get more into it. All right, David, take us away. Tell us who you are, what you do, and what brought you into the business.
So, David Smoot, I've been in the mortgage industry for over 20 years.
Take us away. Tell us who you are, what you do. One of you guys is sharing, but got to turn your volume down.
Me.
Yeah. So initially, I got into this business. I was in the telecommunications field back when 9/11 happened, and after that debacle, that industry took a serious nosedive. I had no experience in the mortgage industry. I had a family member that was in the industry and kind of introduced it to me. I had no knowledge of it, no mortgage myself, but I am a firm believer that I can sell me. I can sell me. So all I needed was the interview.
Yep.
So I got the interview and ended up in the industry. Fortunately, I was able to be taught the basics of the industry by a gentleman who used to be a director for Fannie Mae. Wow. So I got to learn the industry from a non-traditional path of which most people who get in the industry get to learn. I got to learn it from someone who would come to me as a lender and would audit what we do and make sure we're compliant. So that's how I got into the industry. Currently, I am a sales team lead for a company called Paramount Residential Mortgage Group. I've been with major bank. I've been with a couple of brokers. And in my opinion, so far in my 20 plus years in this industry, this has been the best fit for me and my customers. They get it. in my opinion. They get it. They understand that the customer is the root and the base and the focus of the entire transaction. We play a part of their team to help them successfully, gain home ownership.
Yeah.
So that's just a little background on David.
I love it. Well, I'm so glad. I'm glad, sometimes, all you got to do is be in the right place at the right time. God will set you up for where you're going and you have no clue, no say so, right? Like sometimes he'll drop you and you think you're going for this and then come to find out you learn that. And now look, right? So I so appreciate you. And okay, so I am Tanya, TB, the Real Realtor. And interestingly enough, I would have never thought I was going to be in real estate. I am a real estate specialist. I don't like to often say agent because agent sometimes gives a negative connotation. And I'll share a little bit that why I say what I say stems from why I got into the business. And honestly, for so long, I was like, I'm a social worker. This is who I am. It's about people. I'm kind of helping people and I'm going to pour into people. And this is what I do. Social work, social work, social work, social work. And then I got into social work with a sales component, which I never ever thought that was a thing. But when I was working with University of Southern California and helping people to get into school, these are people who say, I want to get my master's degree, and I was working them through that process. I worked it from a business side, and I was like, oh, there's a component. So now sales kicks up, right? Again, remember, I said you'll get set up for where you're going and have absolutely no clue. I did that for 5 years. And then from there, during those 5 years, my husband and I decided to purchase a home and was taken advantage of by somebody in the business. And they really was trying to push you. And here's what I learned. You don't know the right questions to ask, right? So I can say ask questions all day long, but if you don't know what it is that you should be asking. And so it was through trial and error, and this agent just kept pushing and pushing, and it was really a traumatic experience for me. And all of a sudden, I put on my Zorro, my real estate specialist Zorro cape, and was like, I am going to be the one to help those in need of purchasing a home. They'll never be taken advantage of ever again, right? And so I became very vigilant about it. And in my business, I'm just as vigilant. I'm I call myself a shark in the business. I don't play because I take whoever comes under my wing as serious as if it's me. Because why? Because I've been there. I've been taken advantage of. I know, unfortunately, in the business, and people may might not want me to say it, but the business, the integrity is low. So I pride myself on the integrity of the business. I pride myself on what I do with my clients. So why I got into the business is I know what it is to have potentially not to be taken advantage of. And I know what it is to have a passion to educate. So I bring my education, my knowledge of people, and my desire to help people get where they're trying to go. And that all that little soup makes for why we are all on this call today.
Yeah.
So, again, if you're just joining us, there's two things I always say. Sharing is caring. So please start a watch party. This information is so vital to our lives, whether you're purchasing a home, selling a home, thinking of buying a home, trying to figure out where I need to start with getting my credit together, trying to figure out what exactly my credit is okay, but I really don't even know what a lender is looking for. That's what today's discussion is about. So number one, sharing is caring. And number two, please, 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 whatever platform you're watching this on, I want you to type your questions because we also want to be able to make sure that you're getting the information that you want as well. We're going to give you what we think you may want to know, and we're going to give you what we think you may want to hear, but we won't know what you really want to know. So use this time. Again, benefit from the fact that this is an unpaid event because these things are happening every day and people will charge you to give you free information. Yes. Now you're getting it for free. So let's make the best of the time that we have. So with that being said, hey, Kurt, good to see you. So I still got more people are joining. Hey, Arlene, it's good to see you. It's Shaniqua. Tanya, it's my girl. She's on. I have Shaniqua in New York. I have Kirk in New York. I have people that are watching all over. And I think it's important that I also say, I'm glad. Please, if you have people that are not even in the state of Maryland, share this information, because David, what he does is not only in the state of Maryland, it is in various other states as well. I'm connected with people in other states as well. The information that Ashlyn is going to share will work for no matter what state you're in. So the truth is, we covering all kind of bases. All right. So with no further ado, I'm going to kind of walk us through the process, right? I'm also being mindful of time. I'm going to walk us through the process. You get an idea in your mind, right? And oh my goodness, I think I'm ready to get up out of this apartment where I'm living. I'm sick of it. It's time. I need more space. The community I live in is no longer good for me. I'm ready to move, right? And I'm going to start first with my buyers. I'm ready to move. I really don't know what I need to know, so I'm kind of coming to you, Tanya, because this is how it comes to me. I'm coming to you, Tanya, because I need to know what my next steps are, right? And so I ask generally traditional questions before I even send them anywhere. Talk to me a little bit about who's moving. Is it just you? Is it you and a mate? Is it family, right? Like, is it, I have a person that's like, Liz, it's several of us that's gonna go on this one loan. I'm like, oh, that's new. Okay, we can figure that out. Like, right? So I want to know who. Now tell me a little bit about your past experience, right? And I want to know, have you, and I tell people, no judgment, right? Like you, Ashlyn, my credit was jack, right? I think I was at a negative 82. I don't even know if that's possible. But I think I might have been. I'm just putting it out there. I might have been, right? And so, and the messed up part is I didn't even have a desire. I shouldn't say that. I had a desire, but I didn't think that I can be in a better place. It wasn't until I was in my 40s. And I just told y'all I'm 50. It wasn't until I was in my 40s when I felt like I got to do something different. There has to be a better way. I'm sure I can probably do better. But I really believed that I was never going to be minus negative 82. And so I didn't move. And a lot of people get like that. They're like, I don't even want to look at my bank account. I don't even want to look at I don't even want to look at it. The fear of even like, what can looking at it really do? But I was there. I didn't even want to look at it because it spoke volumes to me. It spoke volumes to my lack of financial wellness. It spoke to my decisions. It spoke to so many things that then kicks up the guilt and kicks up. So I rather just don't deal with it, right? And so now, Ashlyn, I want you to kind of start. Here I am. I'm Tanya with negative 82 credit. I don't know how to get out and be in a better place. And so what do I do? Like how do you guide your people? Tell us, number one, what you do, and then guide Tanya through your process.
Yeah. So first and foremost, I'll set up a phone call or a consultation with the client, with the person. And I do the exact same thing. Hey, how you doing? Tell me a little bit about yourself. What is your past experience with your finances, with your money? What's currently on your credit report? When was the last time you checked your credit report? What bureau are you looking at? Why do you want to go on this financial journey? What is motivating you? What is influencing you to go on this financial journey? And then we discuss a little bit about, what is the goal? What do you want to get out of this? Are you trying to purchase a home? Do you want to purchase a car? Do you just want to clean up your finances? What is it that you want to get out of the process? I ask them a little bit about their past, same as you do. Tell me a little bit about your past. Have you ever gone through any type of finances or like credit restoration? What was your experience like? Tell me some of your fears. Did you enjoy the process? What didn't you like about the process? So I just try to get some background information from the client that I'm working with. So I'll ask all of this information to Tanya. We'll have the conversation. We'll figure out what is it that she needs. Depending on what she needs, I may or may not be the person for her. Some people are looking for debt consolidation, which is something I don't do. So having these like in-depth personal conversations is really, really important. So I just get background history, what's on your credit report. Have you ever tried to dispute anything on your own? Have you been through any type of credit restoration? What is your goal moving forward? And then I ask them, do you know what creates a credit score? So how can you build a credit score and you don't even know what the components
That's good.
are to make up a credit score? Most people don't even know what makes up a credit score. They're like, no, I just thought I just had to pay the bill. I didn't know it. I had to keep my percentage under 30% on my credit card. Like they don't know this stuff. So I have that conversation. Hey, do you know what your credit score is even composed of? Do you know what it's measured? They're like, no. So then I have that conversation and I break down each component of what makes up our credit score. And then they'll be like, okay, well, I don't have this, or I do have that, or I'm not good with paying this, or, we start having that conversation to break it down even further to figure out what is it that you need and how can I assist you? Because I want to make sure that we get you in, get you what you need so we can transition you to the realtor or whichever way you want to go. So I do just a quick background history of the client, what their goals are, what they've been through in the past. Do they know what their credit score is? Is there anything that needs to be disputed? When was the last time they checked their credit in their finances? And do you know what creates a credit score? What comes about within a credit score? So we have all of that conversation. And then from there, then I can kind of say, hey, we can talk about what resources and services I have to offer to the person to create an individual path for that person.
That's good. I think it's important that last piece was so relevant to say, to create a path for that person. I think it's important that people know that everybody's situation is different. You can have 3 people that have the same challenge, but their path is different. Why? Because we're not, when you're talking about your credit, you're not only looking at what oftentimes people think it's my score, but really what people are looking for, and David will talk more, I don't want to steal his thunder, but your financial history, right? Yeah. And so it's the history, and everybody's history is different. Everybody's history is different. So, here's a question. Woo! Every time there's a question, I want us to big it up because it's hard asking questions because people, no, for real, because people sometimes don't ask questions because they feel like, how are people going to look at me? So to my first question on the board, woo! Good job. Okay, so here's the question. I posted it up. It says, I'm in my 30s and I don't have credit because I've seen so many people in debt suffer from stress. How can I build credit without fear? I'm gonna tackle the fear part, and you can tackle the credit part. Okay,
let's go.
The fear part, you just gotta be like Nike and do it. Do it afraid. I told you, -87. Oh, did I say -82? Whatever it was, I did not want to look at my stuff because I recognize, unlike you, I did have bad credit. So just do it. Do it afraid. The truth of the matter is anything that's new is scary. It's okay. It comes with the territory, but do it afraid. So now you can tackle the bill.
Yeah. So the other part about credit is, first and foremost, most people suffer from stress, anxiety, confusion is because what? They're not educated on what the finances are. They don't know what it is. Self-disclosure, I'm gonna tell, I wasn't taught how to budget money, how to save, how to write a check. Like, I wasn't taught all of this stuff in school, in formal public school. I wasn't taught. And then, my parents literally didn't teach me this either. So it's all about educating yourself. It's scary, absolutely. We've all had to, we've all had to go through it. I've been there, I've done it. But create a foundation, create a rapport, create a relationship with someone that you can trust. Surround yourself with good people that are secure, who you can trust and you can be vulnerable with and have those open, transparent conversations with, and educate yourself on what not even just credit, finances, money, credit, interest rates. What does a credit score look like? Like, we have to have those type of conversations.
So, knowledge is power.
Yes,
you need the knowledge. The fear is not having the knowledge. Yes, once you understand and you have knowledge, then the fear kind of diminishes. It begins to go away.
Yes. First and foremost, just get educated. Take it step by step. Just get in front of someone, talk to a good person that you feel comfortable with, and get the education. Knowledge is power. Yes, David, I'm with you. Get educated. That's the only way you're going to learn and take away and release and diminish the stress, the anxiety, the confusion, the feelings of overwhelming.
Can I share one thing? One thing. Fear. I've learned this in my 49 years. I've learned this. If the obstacle is there, you might as well face it. It's not going anywhere. The sooner you face it, the sooner you will learn that it's not as bad as you think. And the sooner you face it, is the quicker you'll be able to get through it and get past it. So deal with it, learn about it, get the knowledge, talk to someone who has a background in that area. They can share the knowledge, which takes the fear away.
That's so good. It's awesome advice. Thank you. Yeah. I have another question, so y'all know what we gotta do when I put the question up, right? All right, here's another question. Y'all ready?
Mm-hmm.
I love it. So here's the question. Should we be paying for these services to get us on a healthy financial path? So I'll start with you guys jump in wherever y'all want to jump in. This is my belief, right? I believe that when I could paint my house, right? I could do it, but I'd rather pay someone to do it skillfully. I'd rather pay someone because I know this is their area. I could bake a cake, but I eat better than I bake. So I like to go to the people that this is their skilled area. I do not go to somebody who is good with finances to do my hair. I do not go to, can you do it yourself? Yes, I'm going to put that out the gate. Mm-hmm. Yes, you can get some information. Google, if nobody else don't know, Google knows. You can Google it. But there's something that happens when you're dealing with somebody who is skillful and crafted and for some people even anointed to do the work, even in the marketplace that they do. And so I rather you have an eye to look at things that I don't know. I even tell people, especially, David, and you, when we get around to you, you can tag on this. There are things that, that lenders are looking for that we think they're looking for, but they may not be looking for it, right? I got a medical bill. You might be like, girl, please. First of all, they're not even looking at medical bills. And second of all, I need you to do X, Y, Z. So that's my little take on it. But you guys tell me. To the question.
I am in agreement with you as far as use an automobile for instance. Yeah, I know some things about some automobiles, but I'm not a mechanic. I let my mechanic deal with that. I don't want to do that. I'd rather pay somebody to do it and tell me from their point of view, because that's their area of expertise. Mm-hmm. So I'd rather have someone who is skillful in that area to provide the service. Also, from my point of view as a lender, your situation and your background, yeah, they may be similarities, but everyone is unique. Everyone's situation is different. Your experience may not be the same as someone else's, even though you guys may have the same score. Your experience may be completely different because you have different characteristics making up your situation. So you got to be treated as individuals, and each individual situation takes on a path of its own. So that's where the experience and the with the service that you're paying for, that's why you pay for those services.
Yeah, and I mean, I can piggyback off of both of you from what you guys just said. Like you said, Tanya, I like to eat, but I'm gonna go to Ruth Chris to make sure that I get, that steak to perfection. Because why? They're crafted in it. They're skilled in it. That's what they do. I'm not here to take away. You don't want to take away anything from that person or that business or that establishment either. I think we are all here for a reason and for a purpose. So once you start building that rapport and having that relationship with the person or with whatever the establishment is, I think you'll be more than willing to invest in that person or invest in that establishment as well. So I agree with you guys both.
And let me even tag something else. I think even when I talk with people about real estate or lending or whatever, I always tell people, interview the person you're talking to, because if trust is not there, the problem is you're more liable to not do the work that is required than to do the work. Because I don't really trust you. When I go to the doctor, if it don't feel right, you ain't my doctor. Like, I don't care how smart you are. You could have wrote the book on it. You can't tell me nothing. So really take the time to get to know the people that are providing a service to you and see if it's a good fit. Sometimes it's just not a good fit, right? Like my energy, I recognize is big, it's over the top sometimes for some people, and they can't handle that. And I'm okay with that. Let me lead you to somebody that works best. Because if I can't give you 100% or you're not willing to receive my 100%, then it's not going to work. So trust is a key factor as well when you're talking about obtaining some of the services that we're talking about, and anywhere anyway. There's another question on the floor. Y'all ready? Here we go. Question on the floor. Another question. Woo! Thank you for your question. Good job. All right. So here's the question. How can I get my credit score up and new qualifications, what I'm being told about COVID? How can I get my credit score up and I'm guessing in some of the new qualifications based off of COVID, which is true. David, this is probably a you question. There are some new, there had been some changes with, what your credit score needed to be for an FHA, and then COVID hit, and then they bumped it up, and then they dropped it down. And so maybe you can kind of tag in a little bit with that.
So how to get your credit score up? It depends on what you currently have credit. What kind of accounts you currently have. That would be the first step. Let me see where you are. And let me kill a myth that most people, and I'm sure Ashlyn can tag in on this also, about credit card accounts. Most people are absolutely terrified of having a credit card account. You shouldn't be terrified. All you need to do is know how to use it. That's what the companies and that's what the credit bureau agencies want to know, that you know how to successfully use credit. Credit cards is a easy, quick, responsive way to help improve your credit score if you use the cards accurately. The key rule of thumb is whatever your credit limit is, make sure that you don't carry a balance from reporting cycle to reporting cycle higher than 30% of whatever that limit is. Most people, the people who feel like they know or are very educated about credit, use a credit card and pay it off. I don't suggest that. My suggestion is to use it. Okay, if you want to pay most of it off, pay most of it off. Leave a small balance. the small balance is going to guarantee that that account holder is going to report that activity, which is what you need to help feed your score. We need things to help feed your score in a positive manner. New credit overrides old bad credit in most cases. So that's part of what you can do to increase your score. It can be as simple as going to your banking institution and opening a secured credit card account. Basically, you're putting your money into an account. They're going to issue you a credit card, and you use that credit card using the general rule of thumb, making sure you don't carry over a higher balance, more than 30% of whatever that limit is, to help improve your score, to feed your score. In reference to the COVID environment, that is right now, it's still a temporary environment. Mm-hmm. So you want to be careful about all the advertisement that is being placed out there. Yes, there are some leniencies in reference to the COVID environment and in reference to the leniency or the forgiveness of your current accounts, whether they need to be paid, whether they can be deferred, but you need to be careful. Those are temporary regulations that are being followed right now. They may go away. And when they go away, what status are you going to be at that time? Those are the questions you need to ask. In my opinion, for those accounts, if you have the money to make at least the minimum payment, I suggest making the minimum payment, at least doing that if you have the wherewithal. If you don't, then you need to educate yourself about what the rules and regulations are for each individual account, because their rules can be different. You want to make sure that you have a complete understanding. Make sure you get it in writing. Whatever their rules and regulations are, whatever your agreement is, make sure you get it in writing. Therefore, you have the backup to support your case when you come out of this status, come out of this environment, to continue to move in a positive, strong financial position.
That's so good. So good. Can you talk a little, can you talk a little bit about what, and again, this might be in your spiel, but right now, what the temporary limit, FHA is for it during this COVID time, or is it pretty much where it would be even if we weren't in COVID?
In my case, with PRMG, we didn't change anything. We didn't change the minimum required credit scores or none of that. The biggest change came with people who have existing mortgages that went on a forbearance. That forbearance status is being treated differently if that particular homeowner wants to do, let's say, a refinance, and they were in a forbearance status. So there are specific rules and regulations that will allow them to still refinance even if they were in that status. But if that's the case, they would have to bring the account current, and then we can proceed with the refinance transaction. So you're not excluded totally, but there are requirements that have to be met in order for, let's say, a refinance is to take place and for you to take advantage of, the historical low rates that are in place right now. So,
all right, I got two questions, and then I want you to give me a spiel about how you work with a client. Okay. David. Mm-hmm. Okay, cool. All right. Two questions. All right. So question number one, y'all ready? Here we go. Good job. All right. Here's the question. So where should your credit score be at in order to qualify for a home? Or do they just look at the fact that you're working on it?
That's a very good question. Very good question. So there are minimum required scores in order to qualify for a mortgage. You get in the door at least 2 credit bureaus at 580 or above. That's with FHA. FHA is usually the most lenient avenue to get into a mortgage. Obviously, the higher the credit score, the better your chances are of being approved. So they look at a couple of things. They look at what your score is, but they also look at your history. Your history for, in most cases, 12 to 24 months minimum, to see how you have been performing via your credit and how you've been paying your bills for the accounts that show on your credit report for that time period. So that's the basis. With me, I always, knowing my lender, I feel like if you have at least two credit bureaus above 600, that puts you in a very good position to be able to qualify for FHA financing. Conventional financing, you need at least 2 above 620. VA, 600. They say 582, but I think the most success is 600 and above.
That's good. Thank you so much for that. That is really good. All right, here's the second question. Ready? Wait, I gotta find it. I lost it. Oh, here it is. All right, here we go. Here we go. Ready? Another question on the table. Bing, 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 bing.
Hey.
All right. If you're joining, trying to figure out why we're clapping for questions, because ultimately, I do believe that sometimes we don't get the information that we need because we are afraid to ask questions. We're afraid that people will judge us. We're afraid that maybe it's a stupid question. And so I am really, really big. I want that was my ultimate goal, was to generate a safe enough space that you feel comfortable and confident to ask the questions, ask the hard questions, ask the dumb questions, ask the weird questions, ask the whatever. If we don't know it, I guarantee you the people that's on this live, we're gonna find out, because now you intrigued us enough to now we now want to be, the best of the best. So we're gonna educate ourselves and come back at but ask your question. So here's the question that's on the table. I have a home already. My question is, can I get my credit back to the score from when I bought my home? My credit went down. That's a good question. It's so interesting. People get a home and then, oftentimes we want to be where we were. I always allow people, I try and stay in my lane. But I think this question I can also speak to a little bit in regards to try not to expect what was, just stay consistent with where you are, and what was will eventually get there. So in other words, make sure you're paying on time. To David's point, even if it's the bare minimum, if you have a credit card, pay the bare minimum. They rather see that you're paying the bare minimum on time than paying more and above, but late, if I can say that correctly. If your bare minimum is $50, and you're like, well, look, I brought my number down, so my debt to income ratio was down, but you paid it late. They look at that and be like, yeah, but you was late. Your minimum was $100, right? So to answer that piece about getting it back to where it was, expect when you purchase a home, it's going to go down a little bit because now you've gotten this big debt amount on your credit. But what happens over time is when you pay for it, or even with a car, yes, it's going to go down, but if you're paying that car on time, it's going to grow your credit. Keep this in mind. It takes a long time to build something. It takes less than a minute to break it down. That's finances, that's emotions. Just imagine with people, you can have a heartbreak in a 1.25 seconds. And now it takes years and years to build it back. You break trust, it takes a long time. So it takes a while to build it. It didn't just happen overnight. And even if it did, it still takes a minute to build up. So just stay consistent in the process, but I will turn it over to the professionals in that area.
Can I just chime in really, really quickly and just break down what a credit score is consisted of?
Please do.
I think once I break it down, then people can kind of see what percentage is where and how it affects the score.
Yeah.
So just really quickly, a quick overview. So 100%, right? Credit score, 100%. A+. 35%, that is a large percent of your credit. 35% is your payment history. 35%. Are you making on-time payments or are they delinquent? Like David said, in the past 12 to 24 months, 18 to 24 months, are your payments on time or are they delinquent? So 35% of your credit is payment history. Are you making your payments on time or are they delinquent? 35%. That's a large amount, right? 30% is credit card utilization or credit utilization. Making sure, if, for example, if you have a credit card and your limit is $100, using 30% or below, which be what? $30? $30
Yes.
is 30% below of $100 credit card limit. So making sure that you are using 30% or below of your credit cards or your accounts, whatever those are. That's 30%. Is making sure that you are using your credit scores under 30%. So if you have a credit card that's $100 and you want to use under 30%, which means that you are only going to use it for $30. Okay, that's 30%. 30% is credit utilization. Okay, 15% is the length of credit. How long have these accounts been open and active? 15% is how long have they been open and how long have they been active. Some people say, I had this credit card for 10 years and it was $500,000 and I finally got it paid now and now I want to close the account.
No.
Don't close the account. Don't close it.
Don't do it.
Light. Do not walk into the light.
Don't do it.
The account. I don't care how large that credit card bill, $500,000, right? I paid it all the way down. I want to close this account because this was so annoying. It took so much out of me to pay this bill. I've been paying it for the past 10 years. Awesome. Congratulations. I'm glad you paid it down. Do not close that account. 15% is the length of credit, right? 10% is the type of credit. Do you have like installment loans? Do you have recurrent credit? So installment loans are like mortgages and things like that. Installment loans, you pay that every month, installment. And then recurrent payments, like a credit card payment, you pay that recurring because you're always using it. You're always, swiping something for food or whatever. That's a recurrent payment. So that's 10%. The type of credit that's on your account is 10%. And then the last 10% is new inquiries. What is on? Who is inquiring on your credit?
Right.
Are you going to Best Buy, Rent-A-Center, Sprint? Who is running your credit and how many times are they running? Don't allow just random companies or random people to continue to run your credit. Don't do that. That 10% makes a difference in your credit score. Do not allow people to continue to run your credit report, especially if you're trying to purchase a home within like the next year, the next 6 months. You want to buy a car the next year, the next 6 months. If you can help it, do not.
Do not. Tell them again, Ashlyn.
New inquiries on your
Tell
credit.
them again, Ashlyn. Do not.
Do not. Tell them, David. Do not.
Don't walk into the light.
Don't walk into the light. Do not allow people to continue to run your credit report to try to get you a loan that's going to fit whatever your budget is to get that new car. Don't do it. That's what I did. That's why I had a 24.9% interest rate on my car that did not have the bells and whistles. It was not brand spanking new, and I did not have a cosigner. That's what I did because I had to get that car running. And I finally got approved. 24.9% interest rate. Do not do it. Do not do it. So that's what makes up a credit score.
That's so
okay.
Let me add something to kind of answer the question a little more detailed. She wanted to know why her credit score went down, The reason why it went down is because that was an installment loan. And when you first get an installment loan, it is considered a high balance because your balance is the same as what you borrowed. So it's going to have an adverse effect on your score initially. But as you make the payments, that it will have the payments will feed your credit score and have a positive effect on your score, which will return it back to, you know, the higher figure that it was before eventually. But it's going to take time. It's going to take time to do that. Installment loans, car loans, mortgages, you know, once those are in place, once they hit your credit report, it will have an initial adverse effect on your score.
That's good. That's so good. All right, awesome. So with that being said, we have a couple of more questions, and I promise you, don't go nowhere because we're going to answer your question. And if you leave, then you ain't going to hear the answer. So might as well just hang out with us. I want David to kind of break down what he does. I know you've been chiming in and sharing a little bit, but so now the client, Tanya, we'll say client TB. So the client TB has gone to Ashlyn. Ashlyn has identified. Ashlyn, are you with us? You look frozen. If you hear me, just know that you look frozen. But Ashlyn has identified, you know, a path. Yeah, we lost her. She'll jump back in. And
Okay.
And now, David, I want you to now, you know, well, let me say this. They'll come to me. I'll say, okay, your credit is in a good place. You think that you're ready. I need you to have a conversation with a lender. And I'll call David and I'll say, hey, David, talk to us. Here is client TB. Welcome back, Ashlyn. Here is client TB. And they think that they're ready. I normally send an email so that we're all on the same page at the same time. And I want you to have a conversation with them about their interest. They're a new home buyer. They are thinking of purchasing a home. David, take it away.
So after the joint introduction, what I normally tell them is, you know, what exactly are they looking for? You know, what got them to this point? And I let them know confidently. Ask questions. If it's something I didn't tell you, I don't care how small you think the question is or how great you think the question is. The key to this relationship, because at this point it's a relationship. It's a relationship that we're going to walk through this process. It's going to be an emotional transaction. You're going to be emotional. I'm telling you up front. But we need to be transparent with each other. We have to be, because you may have the answer to my question. I need to ask you. So the first thing we need to do is to find out exactly where you are. What I mean by that is we need to see where you are regarding your credit. We need to know where you are regarding what kind of income you have. We need to know where you are regarding what kind of assets and reserves you have to provide to go towards this transaction. Also, what assets and reserves you have that will be left over after this transaction has been completed. So the best thing we need to do is to get a pre-application in place to identify where you are in this process spectrum. Once we identify what that is, once I complete my initial review, once you provide me with documentation that supports the information that was placed on the application, then the work begins. Then we put together a game plan to walk us through this process of home ownership. That's where we start. Tanya, your realtor, and I, we work as a team. We make sure we know exactly where you are in this process. My goal is to over-prepare you for this transaction. I always over-prepare my clients monetarily for this transaction. One of the last things that I ask them is that they want to know what they really want to know. How much do I qualify for? What do I qualify for? I don't answer that question right away. I ask them, what is the maximum mortgage payment that you would be comfortable with paying? I need to know that because that's going to help drive me and help direct not only me, but Tanya as well as to where we need to focus our attention in what areas, as far as, you know, what home will fit into your budget. That is an important question. I need you to be comfortable with the payment moving forward. So that's one of the questions I ask. Ultimately, at the end of the day, I do identify what their maximum buying power is. But I need to know, you know, where are you going to be comfortable with your mortgage payments so you're not struggling. I don't need you to be struggling trying to make a payment for 30 years.
Right. So David, tell them what you do. So what happens, right? So tell them what you do. So now Client TV has come to you. You've gotten a little bit more background and history. Then what happens next? What do you do?
So once we get the application in place, we run a tri-merge credit report. You know, I do my due diligence, do my checks and balances. There's an automated system that we run the information through to determine if you're in a pre-approval state. Yeah. Once I have identified that you meet all the metrics and the requirements to become pre-approved, I identify what your maximum buying power is for the specific area that you want to reside in, and we move forward from there. Each individual situation can be different, though, as far as the structure of how we put the pieces together. I look at the individuals separately. I have a clean canvas, so to speak. Everybody's situation is different. I need to know what you have to work with and what you're willing to put into this transaction and what you're not willing to put into this transaction. You know, people may have access to funds or assets, but they don't want to use them. And if that's the case, that, you know, that's what we have to work with. And I structure each individual financial loan around that individual's application and their characteristics and what their goals and desires are. So that's how we move forward. Once I have reviewed the credit, they meet those metrics. Once I have done my checks and balances as far as the income and the assets that they have available, then we move forward with, you know, providing a pre-approval, and then they're in a position to be able to home shop.
Then you're ready to bounce them back to me. Can you tell them the difference between, I always talk to my people and let them know, if you're out there and you're shopping for a lender, you know, what are some of the things that they need to know? And the bare basic that I always tell people is there is a difference between a pre-qualifying letter and a pre-approval. Don't think just because you got a pre-qualifying letter that you're ready to rock and roll. That means I'll tell the people what I say, and then you can correct me. This is what I say to my people, because I like to keep it at the bare bones, bare basic, because that's how I needed it. So I tailor it to who I'm working with. I have some people who I work with who are in the finance industry, so there's some language I can use where somebody who fresh, I don't know nothing, it looks different, right? And so the way I describe it is a pre-qualifying letter just says what you could be eligible for. That's it. It means that you could be eligible. A bank could potentially be willing to work with you. You might have some credence somewhere, but it doesn't mean that's it. It just tells you how good you look. It's like somebody giving you a compliment. Oh, you look so nice today. Oh, your hair looks so good today.
You know what a pre-qualification letter is? It's about as good as the paper that is written on. That's 100% transparent.
That's all it is. It's a compliment.
Yeah. That's about it.
Very good. But a pre-approval not only now has said you look nice today, but it also has said, I'm going to give you some money to keep looking nice. Okay. A pre-approval is what is a bank's way of saying we will fund you the money. So that's how I phrase it. A pre-qualifying letter just says you could be eligible. A pre-approval letter says you're eligible and we will give you the money.
Yeah. So a pre-approval is when your personal documentation has been reviewed by the initial gatekeeper.
Who's that?
That would be me, the initial gatekeeper. I'm not the end all to be all, though.
Right.
Okay, based on my experience, based on my knowledge, this is what I see that you can be pre-approved for, based on the information that you have shared with me and the documentation. Okay. The ultimate goal is to get the approval letter, approval/commitment. That means that the underwriter has reviewed the documents that the customer or the borrower has submitted, the applicant, and they have checked off on what they have submitted. Now, when you get your approval/commitment letter, there's going to be some additional requests being asked by the underwriter that you need to meet in order to receive final approval and for your loan to get funded. So the underwriters are the individuals who give us the final thumbs up, go ahead, stamp of approval. All right, we're going to send the money. So the underwriter's final approval is the ultimate goal. That's the level of which we need to cross and the threshold that we need to, to go past.
That's good. That is so good. And yes, Shaniqua, there is a difference between pre-approval and pre-qualify. And
absolutely.
Hopefully, this kind of has helped, because a lot of times people don't know, and they think just because they get a letter, they're not understanding the difference between the two. And so that's really, really key.
So basically a pre-qualification is just a conversation that you've had with a person from a lender's position without the supporting documentation. Pre-approval is the next step where, okay, you've had the conversation, we have the application, and you submitted supporting documentation, and everything seems to check out.
Yeah. All right. So there's one more thing I want you to tackle, and then I'm going to go back and answer, pull some of these other questions that have been popping up. Really good questions. So the one thing I want you to walk us through really quickly, David, is you reference I'm the gatekeeper. So now we've gotten a pre-approval, right? Client B has now been pre-approved. We'll make it easy for a house of $300,000, right? 300. Yeah, I said it right. Sometimes them zeros get a little weird. $300,000. And they're looking to live, and I don't want you to get too specific, because I know it definitely changes depending on where you live. I have people on here from New York, so that'll look different. It'll look different for people who are in Virginia. So without going too deep, right? Bare basic. They've been pre-approved. Now you tell client B, what is it that they need to bring you? There are several documents that they need to be putting together now before they come to a lender, so that when they are pre-approved, the lender is going to ask them for what?
So the general rule of thumb is the time frame that you need to cover is 2 years. So you want to have 2 years W-2s, 2 years tax returns, most recent month worth of pay stubs, usually 2 months of coverage for any bank statements, asset accounts, retirement accounts. Usually retirement accounts are quarterly, so that most recent retirement account usually covers that. If you have student loans, you have to document what your minimum required payment is, even if it's not in repayment status currently. You still want to get documentation stating what that minimum payment is when the status does transition into repayment status. A lot of people think that if a student loan is deferred, that, no, they still want to identify what that minimum payment is. So that's important. And you rather have that documentation from the student loan than the general rule of thumb. General rule of thumb is 1% of the balance, which is usually much higher than what the minimum required payment would be. So the key number is usually 2 years of W-2s, 2 years of tax returns, 2 months of assets or reserve account statements, all pages. All pages is important. A lot of people will send me bank statements and leave the last page out because it's blank. Well, the key is I don't know it's blank. You're telling me it's blank, but it's got to be documented. It has to be documented. Very important. A lot of people today have regular jobs and they have businesses on the side. You definitely need to disclose if you have a business on the side, because that business on the side can impact your buying power, the way your taxes are being done. If you're recording a loss for that business, it could impact your qualifying income. So you definitely want to have full disclosure on those things. But the basics are W-2s, tax returns, pay stubs, asset statements.
That's good. Thank you so much for that. Now, I have a question, and this is really a personal question because I have somebody that's on here that I know if they don't ask the question, they're going to get this answer made because I'm asking on their behalf, which is, you know, a lot of times people are looking for, you referenced it, your W-2s, and you tagged on it when you said retirement. I have people that come to me, I'm not working anymore, right? But I'm looking at purchasing a home. Am I even eligible for a home if I am only collecting retirement benefits and not having a full-time job?
Absolutely. Absolutely. You can qualify for a home on a fixed income. We just need to get that benefit letter, that pension letter, or what you're receiving, per month. Another huge question that I ask when people are in that position, is that money taxed? Because if that money is not taxed, those people get an extra 25% boost on the qualification number.
Ooh, come on with it.
That qualification number can be increased by 25% if that income is not being taxed. So absolutely, you absolutely can purchase on a fixed income, whether it's retirement, if it's Social Security, if it's disability income, if it's long-term disability income, that those items can be used. We just have a different way of documenting, what you're receiving. Absolutely.
Very good. So here's I think the last question was supposed to be the last question, but I got another question for you. So, okay, now they've been qualified. They provided you with the documentation, and I'm going to walk them through the home buying process. So I don't want to get too far in, but what do they need? A lot of times the main question is people want to know is how much I got to bring to the table at the end, right? Like that's the biggest thing they want to know. How do you generally answer that question?
So the total funds needed for closing, and you've experienced this with me, and I tweak it as I go along to break it down in layman's terms for our customers, is we identify there's a couple of areas. We have the required down payment, and then we have the closing costs. Those two areas make up settlement costs, which is everything all inclusive, everything needed. Once we identify what that overall number is, we identify what is being contributed to subtract from that overall number. Your earnest money deposit, which is the deposit you make on your contract, that number is contributed to that overall figure. If the seller is contributing money towards your transaction, that figure is contributed to that overall number. If you're receiving some assistance from an outside source, some down payment assistance from a nonprofit organization, that figure is contributed to your overall settlement costs. Once we identified what is contributing to the overall settlement costs, then I do the calculations and determine what your funds needed at the table will be. Again, I tell my people, and I repeat this statement all the time, I am going to over prepare you on purpose. I'm going to try to prepare you to have more money than what I see that you need at the end of the day. That is a very easy conversation for us to have. I'd rather do that and have you walk in with a little extra savings that you weren't counting on than vice versa. Than me coming to you at the end of the day stating that you need more money.
Yeah.
I've been through that in my early years. That is not a good conversation to have. Believe it, it is stressful for me to have that conversation. So I'm going to avoid that at any and all costs. I try to over prepare our people, so they're over prepared for the transaction, and because it's emotional enough just walking through the process anyway. You know what I mean? It's just an emotional transaction.
That's good. Thank you so much for that. So I want to tackle before I come in and talk about the home buying process. So again, now we're clean. We done worked on getting your credit in order, right? With Ashlyn. Ashlyn says they ready. She tags him back. I then say, okay, David. I've now tagged David in. David has gotten them to a place of understanding what they are eligible for with a pre-approval, not a pre-qualify. We don't want any compliments. We want the money. Okay. So great. So now David has gotten a pre-approval. And then now I'm going to kind of talk about my process and how I walk a client through from beginning to end with my team in place. But I do want to go back to some really good questions. I don't want to forsake those questions that have been asked while we were chatting. Here's one question that's on the table. Woo! Yay, question. Thank you so much. Again, if you're joining me late and you're trying to figure out why we acting crazy because somebody asked a question, again, I keep saying it's hard to ask questions. Sometimes you just don't want to ask a question for fear of what people might say or what they may think about you. And so I want to make sure that people are getting their questions answered and that people see that it is okay to ask questions. I don't care what kind of questions that they are. So here's one question. If your car has been repossessed before, does it take longer to build credit? I'll throw that to you guys. I know the answer because I've been there. Actually, I've been there, done that, but go ahead, y'all take it.
So what I will say from my perspective, from some of the clients that I have worked with who have had repossessions on their credit report, it does hinder them for a while with your credit report. However, if we can dispute it in any way to get it removed off of your report, then, once that account is off your report, your credit score and your finances could gradually increase back up. But I also have seen people had a repossession and their credit score, was pretty up there as well. So there's no straight black and white answer for this. It kind of depends on what's on your report, how long the repossession has been there, other things with your credit, other things with your finances. So it can go either way. If it can be disputed, let's try to dispute it and get it off your report. However, at the same time, I've seen people's reports and who have experienced with repossession on their credit report and their credit score was pretty high. So it can go either way. I don't have a black and white answer for that, but David or Tanya, if y'all can chime in.
Well, let's just put this out there. There is no such thing as black and white with finance except for how the numbers tally. That's it.
Right. Right.
When it comes down to the numbers, but when it comes from that perspective, yes. So from David's side, yes. From Ashlyn's side, no. Only because everybody's situation is so different. You have three people with the same experiences, but their situation still will play out very differently.
Yes. What I can say is in regarding to any adverse account that affects your school, whether it's a repossession, late payment, what have you. Okay, that's feeding the deduction of your credit score. So you combat that with positive information feeding your credit score. Whatever positive information you can do to counteract that negative effect is how you recover your score. Again, new credit accounts override old bad accounts. So whatever the negative impact account that you have on your account, you counter that with some positive information, reducing the utilization on your credit card accounts. Believe it or not, the credit card accounts have a tremendous influence on the changing of your score. The impact can be tremendous in a very short period of time. For instance, if you reported for the month of December and your utilization was high, let's say you were using 70% of your credit limits, but you paid your balances down before the cycle changed over, before they reported for January, down to below 30%, it's going to positively affect your score tremendously. It could be that quick. It could be a 30-day turnaround for you to receive a positive impact on your score. It's just having the knowledge and knowing what to do to affect your score in a positive manner. So if you have that negative account on your credit report, then the key is to do more positive things to counteract that negative hit that's been placed on your credit report.
Before I read the next question, I want to say it's about having a plan, right? And so there was a question earlier: should you pay for someone to do these services? Again, I will always say, can you do it yourself? You can, but I pay professionals to do what they are skilled and gifted to do, and they can help you with a plan of action. Ashlyn can look at your stuff, or David can look at your stuff and say, okay, you have these things. I want you to consider doing step 1, step 2, step 3. While you're doing these steps, I want you to also do A, B, and C. So while you're working on this, while we're trying to dispute the repossession, I want you already have a credit card. I want you to make sure that you use that credit card this month, but then pay off down that, or pay down that debt, or whatever it is. Again, it looks different for each person, but it's about having a plan. Have a plan, work that plan. The Bible says, write the vision, make it plain. And that's even a financial vision. So yes.
Yeah. I tell people this during my initial consultation, also ones who may not be as educated in this credit field. I tell them, use the tools that have been given to us. You need to know what your credit score is. You need to have access to what that score is. Hey, get Credit Karma on your phone. Download Experian on your phone, the applications. If you have credit cards, all the credit cards that I know have a software of checking what your credit score is. For instance, Capital One has a service called Credit Wise. You go in there and you identify and you look at what your score is. That way you can track. That way you can identify the changes in your score based on your activity, on how you're paying your bills. Credit Karma gives you tips on how to improve your score. I'm sure some of the other applications does as well. So you don't necessarily have to have someone doing a hard credit inquiry on your report for you to have an idea as to what your score is. You don't be afraid. Let's see what's going on. Yeah. Knowledge is the power, and you can control it. You can control what your score does based on your practices, your discipline, and how you pay your bills. But the main thing is knowing what controls it. So you have to at least know what your score is to identify, what the changes are based on, how you're paying your bills.
Good. All right. So here's another question. Oh, I see my mom. Hi, mommy. My mother said hi. I gotta say hi.
Hello.
Okay. So here's another question. The ding and the question, they go together. Here's another question. I'm putting it on. Woo, woo, woo. Good job.
Yay.
All right, here's a question. Is it bad when credit card companies close the account?
I will answer this. So some companies will close accounts on the behalf of the consumer when the consumer is not adhering to the account terms. For example, a cardholder can repeatedly miss payments or repeatedly have late payments. into the lender or the credit card company, you are a risk factor for them. You're a liability now. So they will close the account on your behalf entirely because you're too risky. You're too risky for the company. So that's one reason. Another reason a company will close an account is that the account's just not active. You're not using the account. You know, you have the credit card or you have the account, but you're not using it. It's been sitting for 6 months, 8 months at a time. You're not building anything. They're not making any money from you. So no one is winning here. So the account, they'll just close it all together because they're not making any money and you're not making any transactions. So
Ashlyn, tell them how that can negatively affect them when they close that account.
Oh, didn't we talk about earlier with closing accounts, whether the consumer, the client, the applicant closes the accounts, or the lender, the company, the credit card company closes those accounts. Either way, the account is closed, which will compromise or bring down your credit score. Remember, 10% of what makes up your credit score is what? Those accounts, those active counts. That's on your report. 10%.
Right. So what happens is the people don't understand is that your utilization just went up depending on how big that closed account was.
Yeah.
Because it's not it is the individual account itself, but it's a combination of all of them together. You know, identifying what your utilization percentage is. And you want your utilization percentage to be under 30%. So if that was a large account that closed, which was holding the largest percentage of your you know, your utilization or your access, that can have a tremendous negative effect on your score. And you'll be like, well, why is my score dropped? I made all my payments on time. I haven't changed anything. But by them closing that account, if that account was $500,000, your limit just decreased by $500,000. So your utilization, because you don't have access to that money anymore, has just increased your utilization tremendously. So that has an adverse effect on your score.
Yeah, absolutely.
All right, here's one more question, and then I'm gonna because I want to make sure that we end at 12. So before I kind of chime in, here's another question. If you're watching and you have questions, you better put it out there. You better put it out there because I want you to get your questions answered. All right, I want you to get your questions answered. But here's one question that's on the table. Woo! Ask those questions. Here's the question. How much is a good number to start off to save when looking to purchase? In other words, what should someone have or expect to have if they're looking at purchasing a home?
So minimum down payments, I guess we'll start there. It depends on that's a wide open question. It's really personal preference.
Yeah.
I say start with $1. The point is start.
Yeah.
That's the point. Start somewhere. Start putting money away. The general rule of thumb is FHA requires 3.5% minimum down payment. Conventional requires 3%. It would take a lot. It would take us hours to go through the difference between the two. But you just got to start. I would say a good number to start with. Let's say if you're in Maryland, you want to have, depending on what level you are as far as the sales price of the house, you want to have at least $5,000, I say, to start. You know, $5,000.
Yeah, I would agree. You know, if I was somebody who didn't know anything, I would probably need to come to the table, start to finish. You want to say roughly between 7,000 to 10,000 to expect start to finish the monies that you're going to have to shovel out. I would probably be there. A lot of times people think they need to have an astronomical amount of money. There are things that people can do. We tagged on it a little bit, but you might have sometimes people don't know that you can borrow against your
retirement
fund. So if you work a job and you've been pouring into your retirement, you can use retirement fund to go towards a down payment. So there are things that can be done, and we talk about that individually because, again, everything is individual to that person. But that's a good question. I would say if you have less than 5,000 that you can use separate and apart to go towards purchasing a home, start building up to that, at least building up to that. Because you don't need all of your money at one time. But I will tell you, as I'm getting ready now to go into the home buying process, the process is faster than most people expect it to be.
Yes. Yes.
So now we've gotten client B. Client TB has cleaned up her credit. Client TB has gotten a pre-approval, and then client TB is working with TB, the real realtor. That's gonna be my thing. I'm TB.
Yeah,
I love it.
TB, the real realtor, right?
I love it.
So I've already now talked to them a little bit about what we said. I know a little bit about them, and I kind of share with them the team right now. They've already been introduced to the team. Now we've gotten the pre-approval. Yay! Now the work begins mostly for me. We're going out. My job is to assess what you're looking for, right? I don't believe in us going to look at 20 homes to find the right home. I just don't. First of all, you ain't got that kind of time. I don't have that kind of time. That doesn't make any sense. Let us put it on paper. What are we looking for? But understand that what we do together. I always say it's team, whatever your name is. So if it's client TB, welcome to Team TB. Team TB consists of the client, myself, the lender, and anybody, the title person, everybody that is involved in this process. We are your team that work for you. Now, we find a home. So client TB says, this is a home. I love it. Great. So now what I do is I put in what we call an offer. The offer goes into the sellers. Hey, Peanut Brittle. Oh, Ashlyn, I'm sorry, that's my daughter. That was OJ. So the person comes in, they now, I have to put in a offer. That offer, let's say the home was $300,000, but I was able to get it down. We're paying now $280,000 for the home. One of the things David referenced is sometimes lenders will give you money. We call that lenders help. Oh, I'm always gonna push for lenders help. I don't care if you're gonna. I'm gonna get if it's $1, you're gonna give me something. We're gonna because that's just how I am, right? But normally I will request, anywhere from 3% on the deal for them to give to us, if not more. So now that's money. What does Lenders Help do for a buyer? That's less money out of your pocket. So if David, after we say we want to go to 123 Main Street, David will tell you. I'll come back to David. I forgot a step. Come back to David. David, okay. Client TB wants to go to 123 Main Street in Anne Arundel County. David's going to say, all right, this is how much you're going to need to put down. This is how much your mortgage is going to be. He's going to give us those crucial pieces that you really want to know on the front end, but we can't know until we find a house, right? So now he's giving us that information. Great. Everything looks good. I'm going to say, David, I'm going to ask for 3%. David's going to tell me, in order for them to be where they need to be, they need 3% or 3.5%, or they don't even really need closing help. That's never usually the case, but I'm still going to go for it, even if it is. Needless to say, this is what we're looking at. Okay.
Can I add something real quick
Yes.
right here, which is important? When she identifies a house for a customer TB, when she gives me that address, I then specify the pre-approval for that property specifically, including any and all details that I can gather on that specific property for Tanya to continue to do her job successfully, because my pre-approval is going to mirror the contract that she puts together. There you go.
Oh, good point. Which means David may say you are pre-approved for $450,000. You've already told me you don't want a $450,000 loan. Well, that's fine. We don't have to go get a $450,000 house. But he's not, the point of why he's saying what he's saying is because he's not going to give me a pre-approval that says $450,000 when the house is only $280,000. If they see that you got more, they're going to try and go for more. And we're not doing it. Okay. We try to keep money in our pocket as much as we can. Okay. So now I put in the contract. With the contract, I write it up. I ask for all that I can get out of that contract. They accept the terms. Most houses, you will go from start, meaning the acceptance of that contract, to the day you get your keys, usually is anywhere from 30 to 45 days. So anywhere from a month to a month and a half is standard. Most people don't realize it's that fast, like literally that fast. Most people think, oh, it's 6 months. It's not that. It happens very quickly. And if you are working with a seller, more times than not, they want you to close sooner than later, right? So somewhere between 30 to 45 days is what we're going to do. They now accept the terms, whatever terms we put in that contract. You've now signed that contract. The seller has signed that contract. And at that moment, we now have what is called a ratified, I'm typing it, ratified contract equals both signatures. If it's spelled wrong, it's because I'm talking and typing and y'all bear with me, right? You want to have a ratified contract. A ratified contract means the seller signed it, the buyer signed it, and now we are ready to roll. And somewhere between 45 days to 30 to 45 days, we'll close. Now, granted, there are times you may say, I don't want to close. I want to wait 2 months, 60 days. Okay, well, whatever the time frame is, that's what it'll be. Now, I tell my clients there are 1, 2, 3 times that it's probably 4, but 3 definite times that you're going to put out money out of pocket. Okay, follow me. The very first. So now once that contract is accepted, you have to put down the first set of tangible funds, which is called your earnest, your EMD, which is also your earnest money deposit. Your earnest money deposit is also sometimes known as a good faith deposit. Really what that means is you are telling the seller, I am serious about that home. I try and tell people it's usually about 1%. You want to kind of keep it in that realm. So if it's a $300,000 home, you want to have at least about $3,000, anywhere between $2,500 and $3,000 to put for your earnest money deposit. Do not scream. You will see that money again. I promise you. It's not just this money that just goes into cyber world. It don't go in my pocket. It don't go in David's pocket. It's holding money, right? So I call it holding money. You will see that number again. So that's the very first time. We have to submit that with the contract, either with the contract or once the contract has been accepted. That's number 1. Number 2, the very next thing that happens is your inspection. Again, your inspector is part of your team. I usually have a team of people that I work with very, very closely. Just like David is a person, Ashlyn is a person. I have I have 2 home inspection companies that I work from. One primarily more than the other. It just depends on who's available. They're very good. The home inspector will come into that house, inspect it from top to bottom, and then produce a report to us. with that report, so that is the next time that you're going to put out some financial expenses, right? That financial expense of your home inspection is usually, I got to do this for my visual learners. Usually, home inspection is usually between $300 to $600, depending on the size of the home. Okay. Mm-hmm. Depending on the size of the home, they will charge you anywhere from $300 to $600. The bigger the home, the more expensive it'll be. Okay. But that's your home inspection. That's the next time. Hey, Rhonda, that's the next time you will end up putting out money, right? Now, with the home inspection, you and I together will then look at what we're faced with. What are some of the challenges of the home? Is the HVAC a problem? Do you need new roofing? Is the home great? I've had situations where I have clients that were like, they didn't really have much that needed to be done. Like, I was like, dude, I don't even know what I'm gonna ask for because it's still in pretty good condition. Then I have some that I'm like, listen, we asking for everything, lottie-dottie and everybody. We want it all, right? So it really depends, but I use that as my next step of negotiation, right? So my first time that I'm negotiating on your behalf is at the beginning. How much we're looking for, what can we get it for? The next time I negotiate, I use for lateral your inspection. So maybe, I'll say, okay, you really want the house. This is what we were at. Let's ask them to either fix these items. Maybe I'll say, well, give us extra closing help. Sometimes my clients will say, well, can't we just ask them to drop the price? We can. The challenge with that is it would have to be such a significant drop in price for you to really see the difference in your mortgage, right? Because that's really what we're talking about. I want to drop the price so I have to pay less mortgage. But if it's it's 200 and you're paying $280,000 on a home and you have a mortgage of 8, and I'm just throwing out these numbers. I know they probably don't go together. Y'all bear with me, but your mortgage is $1,800 a month. Well, guess what? We now dropped it down to $270,000. You're not going to see that difference on how much you make a month. So I don't necessarily go there. I hold that for the purpose of appraisal, which I'm not up to, but I'm coming to. So I'll say, give us extra down payment. Lenders help. And when it's all said and done, I always ask for a warranty, right? So that's something that I always put on the table. Give me the warranty. If nothing else, we're going to walk away with that because the warranty is going to help you with, various different things within the confines of that home. Now, once I go back to the table and I say, this is what we're asking for, and they are willing to come to terms with what you are expecting, that's pretty much the home buying process. Honestly, there's not much more that you are going to be doing with me as much. You're going to be doing a lot more with David or your lender at that time because they're still collecting documentation. It's going from David to the bank, from the bank to David, the underwriter. There's so many other hands behind David that will be asking for information that you'll be doing a lot more hands-on with David. But even though my time with you is we're not like together as much as we would be at that moment, there are still things I am working on. So I now become more of a facilitator of the process from start to finish, right? I'm making sure David got what he needs from you. But now we introduce a new candidate, a new person to this process, and that's your title company. The title company that I use is also the person that you're going to see at the table, right? They're going to be the ones that brings this deal to the end. But what their process is beforehand is they are working with you to check to make sure this home is available to be sold, period, right? Think about it from a car. Every car has a title. so does a house. And that title has to be clean in order for it to go from one seller to a new buyer. So your title company does the background. They check in the courts. They, in from the legal side to make sure this is a legal transaction that can go from one person to the next. Okay. I utilize a particular title company as well. So again, I have a group of people that I pull from. I always tell my clients, you do not have to use who I use. I just trust who I use because, again, I started in the beginning by saying integrity is limited on these real estate streets in my experience. And so because of it, I want to make sure that I'm working with people that's going to fight for you as much and as hard as I will. And that's going to give you the quality that you deserve in such a big purchase. So I will go to my title guy and I'll say, hey, Adam, we got a new client. They will begin the title process. He'll come back and he'll notify. They're part of now the team. They notify the team. Everything is good to go. Or we have a glitch, right? And they let us know what that glitch is and what needs to happen to clear that glitch. And so now we found the home. We put a contract. You won that contract. The title company has cleaned provided us with clean title and green light to go on their end. David or your lender at that point, which should be David, who would then say, we have green light. You provided all documents. David is going to tell you, okay, client TB, this is the final number you need to bring to the table. Please know from start to finish of this home buying process, you're not going to be taken by surprise with any numbers because you're going to be told those numbers time and time again throughout the process because we want to make sure that you are clear on what you need to bring to the table. So it's not like, I didn't know I had to have this. I didn't know I had to have that. Okay. Now, at some point between the title person and you working with your lender, AKA David, y'all like my plugs, right? I hope y'all do. Okay. AKA David will say, we need to, you're going to have to put out money for your appraisal. Now, remember, I told you there's 3 times. There's the earnest money deposit. It's your inspection. And then the next time that you're putting out, the next time you're putting out finances is going to be for your appraisal. Your appraisal will come to make sure that we said we're buying this home for $280,000. The appraiser goes in the house to make sure this home is worth $280,000. A lot of times it measures up to either being the amount or more. However, there are often times that it comes back less than. If it comes back appraising more than the $280,000, there is nothing for you to do. It doesn't matter. It's fine. You don't have to put out more money. It does nothing. It just tells you that you have a house that is worth more than what you're paying for. Mm-hmm. The only time it matters is if that $280,000 comes back and they say it's worth $270,000. Now we are met with a situation that requires more negotiation or not. So one thing that generally that I've seen thus far happen most times is the seller has to bite the bullet and accept the fact that their home was approved for $270,000. And now what they thought they were going to get for the home, they have to consider. Now you got to put it on, either put it on the market for that amount or allow my client TB to purchase this home for $270,000. Yeah. The seller does not have to. I repeat, the seller does not have to. It would be in their best interest to, but they do not have to. But a smart seller will say, Dad, my house is more than that. That don't make no sense. Blah, 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 blah. Okay. We'll concede to the buyer for $270,000. That's great. That's when it goes over smoothly and then there's nothing more to be done. Sometimes I have buyers, I have sellers that say, no, we're not changing our number. Either give us the 280,000 or the deal is dead. And I have buyers that'll say, well, can I just make the difference? What happens is that means you're going to have to come to the table with an additional $10,000 to cover that cost, because your lender, not David, but the bank, is not going to loan you money for $280,000 when it appraised for $270,000. They're only going to give you what it appraised for, which means that $10,000 got to come from somewhere, which in this case would be you. We don't like when that happens, right? Then we're going to have a hard conversation. How important and invested are you in this home? And can you bring the money to the table for it? And that's then how you make that decision. So that's the third time you come to the table to put out money for the appraiser. So let's just assume everything goes great. Wonderful. Now we are closer at this point to that 30-day, 45-day window. And we will already know in advance that our settlement date is, January, February, March 15th. So it's March 15th. We now come to the table and you'll bring your check and you get your keys. And congratulations, you are the proud owner of your new home. And that's the process. I just gave y'all home buyer 101 in 2 hours. So, with that being said, I want to make sure that there aren't any lingering questions, and I'm going to give you guys the opportunity to have a closeout, any closeout thoughts or feelings. I know we have some people that have just joined us, and we are talking about credit. We're talking about the lending process. We're talking about the purchasing process. I do want to chime one little caveat. If you're somebody who is watching and you have a home and you're wondering when is the best time for me to sell my home? Should I sell my home first and then buy? Should I do it together? I am skilled. I have done it time and time again where I have had people buy and sell at the same time. Is it nerve-wracking? Yes. But I am skilled at what I do. I put my social work hat on, I keep you at bay, and we get it done. It is usually, for the most part, a smooth enough transition. It just gets a little dicey when you're ready to sell your home before you're able to purchase a home. But we talk about those things on the front end so that there's a plan in place. We don't do it on the back end. We do it on the front end. And I am what's your plan A? What's your plan B? What's your plan C? Let's rock. And then we go. So I just want to put that out there. If you're a person who's just looking to sell, definitely let me know, because I can work on, I can talk with you about whether selling is best or whether making it an investment property is best. So that where you can make that a rental. So that's something that we can talk about as well. But here's a question. Please throw your questions on the table. Even if you missed the first half, even if you think we may have covered it, please put your questions out there while we have these last few minutes for closing. Here's one question on the table. Woo! Good. Ask those questions. Ask those questions.
Yeah.
Any tips for those interested in acquiring an investment property? Is it the same process? Financially, it is not. The process is the same, yes. However, the expectations are different, right? As far as the finance side, and David, you can speak to that. It's different lenders, different type of loan that you have to acquire when you're doing an investment property. As far as identifying the purchase is pretty much the same. So, David?
Yeah, the process is the same. The specifics regarding the financing is different. The down payment, there's a much larger down payment required. You're required to have at least 20% of the sales price to place down on the purchase of the property. Outside of that, The actual steps of the process is pretty much the same. Because it's an investment property, the risks are higher from a lender's point of view. So with that in mind, the interest rates are a little higher. There's a larger down payment required. Outside of that, the overall process itself is pretty much the same.
Good. Thank you so much. David, can you tell us, since you're talking, I want you to give any closeout thoughts, but one of the things I want you to cover is states that you are approved to get to do your lending. What other states in addition to Maryland?
So the position I'm in, I can lend in 48 states, all states except for Wyoming and New York. And the reason why Wyoming and New York are excluded is because they have some specific requirements in those two states that are hard to get by. So we choose not to lend in those states unless you basically have to have brick and mortar in those states. You have to be positioned in those states pretty much. Hey, to close out, ask questions. You see us on Facebook on this live. Reach out to us for any inquiries you have. We would love to work with you regardless of where you are in the spectrum. If you're willing to work on yourself, we're willing to work with you. Mm-hmm. That's pretty much. You have to be willing to invest in yourself because that is what's required in order to go through a process such as this.
Yeah, very good. Thank you, David. All right, Ashlyn, any final thoughts?
Yes. So I will say, like I said, thank you again for having this platform, Ting, and this was awesome and amazing. I had a really, really good time. So thank you for that. Also, I want to tell people there are 4 things that I implement and that I live by that I tell my clients is that we have to educate ourselves. First off, we have to educate ourselves on the financial process. And I don't care where you are in the process, like David said, invest in yourself, get educated. So the 4 things that I always tell my client is that you are deserving of great things. You are deserving of purchasing that home, purchasing that car, cleaning up your credit, receiving your buying power back. You are deserving of those things, So you are deserving of those things. You are worthy of great things. You work, you pay your taxes. Why not have fun and enjoy the fruits of your labor? You are worthy of great things. You are valuable. You bring value to the table. You bring value to this process. You bring value to your finances. Don't sell yourself short just because you don't know. There was all once upon a time where we didn't know. We didn't have the answers, but we got educated on the process. So you're worth value. You're worth something. And the last one is make the investment. Make the investment in yourself. That's all this process is. We are all human beings. We're not God. We're not saints. We can't make things just happen over a 2-month span or a 3-month span. Make the investment. Have those conversations with yourself, with your family, whoever you're, making that investment with, and make sure that you are prepared to go through the process. Time is the most consistent thing in everyone's life. And it's the most disrespecting thing that I can attest to because I have said I would do things and didn't do it. And time has just gone on. Make sure that you are investing in yourself and you have the time to invest in yourself because everyone's time is very, very, very valuable. If you have a question, ask the question. So you are deserving, you are worthy, you are valuable, and make the investment. I'm here to help out in any way possible. If you don't have credit, I can help with building credit. I can help with getting things reported on your credit to improve your finances. So just because you don't have credit doesn't mean that you can't start the home buying process. Working on all of this stuff now, the finances part now, is you working on the home buying process. Yeah. So if you need to build credit, I can help you with that as well. If you need to build some finances, I can help you with that as well. So no question is a stupid question. Make the investment. I'm here to help. Like I said in the very beginning, I'm here to help you build all the way to managing, saving, budgeting, all the way to the very end as will and trust and power of attorney. Financial literacy is all education from the very beginning of building, from budgeting, all the way to the very end of a will and trust. So I'm excited about it. Please, tap into one of us if you have any questions or concerns, and make yourself a priority. You are an asset, and believe that. Believe it.
That's so good.
Yeah.
Well, David and Ashlyn, I so appreciate you guys. There was one question that popped up, which was, I got a second question that just popped up. Is it wise to purchase a home with a boyfriend or girlfriend? I'm sure this is a difficult question. I would say, I'll take the easy side, right? Like, it really depends on the credit. I know I always tell people, if you are going into the home buying process with somebody else, when you speak with your lender, just like as if you were doing it yourself, would look at the status of both persons and then indicate, yes, it's better that the two of you purchase together, or maybe it's better that one person purchases, gets the loan, and then you guys both go on the deed. So again, it definitely depends. It's based off of what each person brings to the table from a financial, I have something in mind, from a financial perspective. The second question that popped up is, can you help if I'm in a different state? I'm in North Carolina. Amy, yes, and yes. I'm sorry, my eye all of a sudden starts to act crazy. Yes, I actually partner with a few people that are in several states. North Carolina is one of them. Georgia is one of them. And David is approved in 48 states. Okay. So, Amy, all you have to do is just, you can either shoot me a message, or shoot David a message, or Ashlyn, any one of us, and we'll connect you to who you need to be connected to. And if you want to have a further conversation, this is for anybody that's watching. If you want to have a further conversation and you have some specific questions to your situation, reach out to me. I am skilled enough and I'm smart enough to know the areas that I'm not skilled enough and who to connect you to. I'm not that person I feel like I got the end all be all. That's why I told every now and then, I was, if I ain't got it right, tag me, because I might have it wrong. But these people have educated me well. Okay. And I think I'm a good student when I'm a student, and I try to teach what I learned. So I hope that today has been very helpful. Please share. Sharing is caring. There are some people that need this information. I don't know why we sway away from it, but the truth of the matter is, the best present you can give somebody is knowledge. That's it. Why? Because you've just given them power to do something different and do something better. So I hope the rest of your day is good. Go back and rewatch this live. I even dare you to go back and watch it. If you joined us later, catch it from the beginning. If you watch the whole thing, watch it again, because there's information. There was a lot of gems that was dropped here today that you want to make sure that you write down. Write the vision, make it plain. I pray you have a wonderful day. You have been joined with David Smoot, Ashlyn Price, and TB, the Real Realtor. Y'all have a great and wonderful day.
Have a good day.
Take care.